What is up, investors? Back again. Today, we're going to take a look at Shopify, which just reported earnings this morning. And as you can see here, the stock is reacting extraordinarily positive to the news that Shopify reported. So we'll jump into the numbers here in just a second. We'll take a look. We got $129 billion market cap. That's absolutely sky high when we take a look at the revenues and even the earnings that this company produced. But obviously, this stock has a lot of momentum behind it. As we stretch this chart out, this thing has gone straight up a mountain here and it continues to climb. So there's a lot of bullish trends and a lot of bullish sentiment around this stock. I think some of it is because of the industry this company is in. A lot of shops obviously are closing or they're doing more business online. That's obviously a trend that has been accelerated over the last few months. Also, I think something that's not talked about a lot, this is a Canadian company and Canadians tend to jump behind companies and really give them a lot of enthusiasm. I remember back in the day when BlackBerry was a public company. Well, they're still a public company, but they were one of the largest public companies, and there was a lot of enthusiasm by Canadians behind that stock. And I think Shopify benefits a little bit from that as well, at least from some of the discussions I see on message boards. Seems like there's a lot of Canadians in there defending this stock's valuation. We'll see if we can do that as we jump here in the numbers. We got the 3-month ended here. We got June here. We got the previous period here. We've got 6 months ended here. We see that revenue is ticking up really nicely on the subscription side. We see that trend continued over the last 6 months as well. Merchant solutions, boom, that is doubling. So merchants are driving even more business through the platform as well. And we see that trend obviously held forward for 6 months as well. In terms of gross profits here, the biggest gross profit is this merchant, the subscription solution. So they give you a subscription. It's almost like a WordPress or, even like Adobe is probably a better example actually. And so they charge you per month and it allows you to use the Shopify software to run your store. And so at $44 million in cost, they generated $196 million for the quarter. And you see those margins hold true. Those margins will likely stay this amount and quite possibly go up as well. Now, merchant solutions, not quite as high margin, but that still is a pretty healthy margin on that business as well. We've come down to a gross profit. We went from 204 in the previous period up to 375 million. That's absolutely sensational. And we see that trend hold through for the 9-month as well. Let's take a look at expenses here as well, because as you can see, this is a company that has been generating a loss. But what I found interesting in the quarter, and one thing that might be driving shares higher, is take a look. We turned positive for the quarter. So we had 375 in expenses and we had 375, almost broke even basically. So you wonder, is this a tipping point? If now that Shopify's reached this, call it $715 million of revenue, and I would guess this would continue to grow. Wouldn't shock me if next quarter they do close to $1 billion in revenue. Does that flow down here to the bottom line? That will be interesting to see if that will continue. If it does, then you can start to make sense of the valuation. Let's just assume that we can annualize this number and call it like $1 billion. Well, then at $129 billion market cap, you've got a PE ratio of 100 and some odd. And while that's extraordinarily elevated, I remember when Amazon was there. I remember Tesla still might be there. Amazon still might be there. So it's interesting. This company is turning a profit now in the quarter. Obviously, for the 9-month, we're not there yet. And in the previous period, we weren't. But we can see the trend rapidly improved over the last year. So this is a company that might be turning the corner there in terms of generating a profit. And in my opinion, if they're able to do that and keep accelerating this top line number and accelerate this bottom line number, this stock, believe it or not, might actually have more room to go. You see here down at the net income is even more impressive, as looks like they get some income taxes back, whether or not, it depends on the administration and stuff like that, how these income tax works. And I don't know if this is all Canadian or US or what, but I would look probably more closer to this income from operation, since most of this net income comes from this tax benefit or this tax this recovery of income taxes here. But as you can see from a net income basis, it's really strong, because in the previous period they lost 28 million, and in this quarter they made 36 million, and we can see that's quite an improvement. And actually for a 6-month basis, they're actually positive there. Now, the other thing I want to point out here is this company is diluting shares, and we see on the diluted basis we went from 111 million up to 121. That is not insignificant dilution. That's basically 10%, call it, dilution. And I'll bring up a news story here in a little bit. This is going to get even more diluted. So this company is going to have to continue to grow these top and bottom line numbers very quickly when they're diluting shareholders that quickly. Moving down to assets, this company is well capitalized. There's not a lot here that to be concerned about at all. Assets ticked up to close to 5.1 billion as opposed to 3.5. We see cash here went to 1.8, but we have these marketable securities. This is blended at about $4 billion. That compares very favorably to the previous period. My guess is this company raised some money in by issuing shares, essentially, as we saw it with the share count. Now, long-term liabilities, this is as squeaky clean as the sidewalk. I mean, this is unbelievable. There's nothing here. There's almost nothing here. There's 320 million in current liabilities, but you got to pay your lease, and you got to, you have some deferred revenue here. This is basically an asset, actually, and or it's balanced out on the asset side. That, and we've got some account payables here. They got to pay some bills, but there's nothing here. The lease liabilities, that's not due. Those are due, every month or whatever. We got more deferred revenue down here. From a balance sheet perspective, this is an absolutely pristine balance sheet. From a cash flow perspective, paints an even better story, because you have this large, massive stock-based compensation. So you have to pay the employees some way, either with cash, or maybe some employees will take something other than cash, maybe Bitcoin, but they tend to pay their employees or compensate them very heavily with stock. And it is obviously, if you're a worker at Shopify, you gladly take shares when they're in this upward trend. So employees are gladly taking shares. And so when you add these costs back in and subscribe some other things, you get really strong cash flows. As opposed to 47 million in the previous period, those jumped up to 80 million. So that's nice too. You like to see that. Finally, from investing activities, actually, we'll jump down to these financing. We see the proceeds from public offering. So here's where they diluted you a little bit. It looks like they got about 1.5 billion net of fees and stuff like that to the banks. So just a little bit of news on Shopify as well here. They're on watch here, they say, because they did a $7.5 billion mixed shelf offering. This came the day before they announced earnings. So this means they're going to basically issue more shares, or either these preferred shares or warrants or other debt securities, to raise more money for $7.5 billion. So they're going to shore up their balance sheet even more, even though it's very pristine and this company just turned an operating profit, I believe, for the first time. They're going to shore it up even more, maybe strike while the iron's hot. As these shares are red hot, they're going to come in here and get more money, and I can't blame them. You as a shareholder have to weigh that if you're going to jump in there and buy some shares. Now, the other bit of news that's kind of interesting, I don't know how big it's going to affect Shopify in the long run. BigCommerce is going to file for an IPO of about $130 million here. Now, BigCommerce has been around a long time. It might even been around longer than Shopify. I'm not exactly sure, but I've been aware of BigCommerce for a while, since I'm in the e-commerce business. So this will be interesting. It'll basically allow BigCommerce to be maybe a little bit more well-capitalized competitor to Shopify. And I think one thing that you could do as maybe you're a shareholder of Shopify, or you're just bullish on the e-commerce space, well, what I would do is maybe build a portfolio. So maybe you have a little bit of Amazon, and Google's definitely heavily invested in e-commerce. Obviously, Shopify is much more of a pure play e-commerce stock. And finally, big commerce might be something that you can add to once it goes public. You can kind of build maybe a basket of stocks here that really give you heavy exposure to e-commerce. I would say big commerce and Shopify in particular would give you some of the purest insights into e-commerce. eBay and Etsy, and there's some other ones in there too that definitely are much more heavily into e-commerce. Whereas Amazon has that AWS business and some other things going on. They also have an advertising business that makes their company much larger, but also takes it away from that pure like e-commerce feel. Now, do you want to jump in here and buy shares when they're basically at fresh all-time highs? I'll let you decide what you want to do with Shopify. Again, if you've been following this channel for any period of time, I like to see when these stocks make these big impulsive moves. Look, it made one back here and then it kind of fell down a little bit, traded sideways. I'd rather pull shares off when they're in this sideward action here. For me, this stock, just looking at here in the 950s to 930s, even up to maybe $1,000 a share. Obviously, maybe before we had this positive news here, that's probably where I would. If it bases out at this $1,100 range, we've got support for this stock even at the 1030, 1040, 1050. So there's some areas here if you want to jump in front of this train and jump on and get rolling. Who's to blame you? This is a company that's their revenues and everything here. They've got a lot of momentum here with their balance sheet is pristine. There's nothing to worry about there, but these revenues are trending in a wonderful direction. Net income is turned positive. Operating income is turned positive. If that trend continues, this stock should continue to trend upward. The only downside is it looks like the company is going to heavily dilute you likely over the coming months and maybe even years. And so that's something that you want to keep in mind. Obviously, Shopify is going to have to keep up those rapid growth in order for that dilution not to really affect you too much. So that's some things you want to think about with Shopify. For me, it looks really good. Obviously, I wish I would have bought it here several times over the past few years. You can go back really far on this one, and there had been lots of times to come in here and pick it up. It's gone parabolic, and if you want to jump in there now, I certainly wouldn't blame you. But if you're a value investor or these metrics don't make sense to you, certainly wouldn't blame you as well. I certainly wouldn't think about going short this one too, because it's just got so much momentum and attention on it. I would just avoid it altogether if you're not a fan of the number. So there we go. There's Shopify. We'll be back later this week with more exciting earnings reports. We've got Apple, we've got Facebook, we've got Amazon, and even more to cover here on the channel. Thank you for everybody that has commented, subscribed, and hit that like button. If you haven't, do one of those things now. I'd really appreciate it. Thanks for watching. Good luck with your investments.